Good morning and welcome to Market Wake Up. My name's Jordan. This is John, and you're watching the one-stop shop to get you up to date with everything you need to know to start your trading day. We're going to break down the macro mumbo jumbo and have a little fun while doing it. John, let's get into the Market Wake Up. Oh, John, good morning. Good morning. How you doing, mate?
Good morning. I'm doing really well. Ignore my mess in the background, by the way. I've been changing the office around, so hopefully by the end of this week, you'll have a different view of how I look in the office space that I have. So yeah, ignore the background. I've been doing very much DIY, and I've been tripping to IKEA this weekend. Do you have IKEA in Australia?
We do. Yeah,
it's everywhere, isn't it? I mean,
it's everywhere.
It's absolutely everywhere.
Are they public?
I have no idea. But yeah, I've had a trip to IKEA, which is always fun. I had acted like a bloke. I took my measuring tape with me. I was measuring stuff.
You handy my element. Oh, look at him go! Did you have cargo shorts on by chance?
I did not. Some runners
to suit your dad jokes.
I'm never going to live this down now, am I?
You're not. But good morning, everyone popping in. We've got Imran Khan, we've got Musclay, we've got Paul, we've got Malcolm. The guys from London Live Trading Floor are popping in as well. We've got Andrew, we've got Potato. Everyone tuning in, I hope you've had a fantastic and restful weekend and you're ready to get back at it. I too am in a different office, believe it or not. It doesn't look like it, but I've been kicked to another room. I have it was against my will. Partner said, you, that one instead. And I went, okay. And I had to move everything down in here. So it is a little bit better. But how was your weekend, John? I got sun-kissed, if you can't tell. I'm a little bit...
jealous. There was a little bit of sun in the UK this weekend. A very minor bit of sun, but it was very cold at the moment. So went on a few wintry walks and whatnot. Took some time away from the charts. Usually Sunday's a day I come back and have a little look at what's been going on. So I did a little bit of work on Sunday and just had a little look at what's been going on, which I'm going to talk about in the big bite today. I just had to look at where I want to really sort of position myself at the moment. We're heading into a very important month as well. Coming up towards that election in the US. So I want to be not necessarily involved with what's going on there right now, because I just think that it's a gateway to get caught on the wrong side of a move. So I'm looking at other sort of assets to just kind of play around with at the minute. So other than that, my weekend was good.
Play around with some assets. I asked how his weekend was, and he's like, I want to play around with some assets. A good one to actually have a look at is I was keeping an eye on it, and orange juice futures upticked Friday, right? Which I found really interesting. We're obviously talking about the impacts of Florida that might have, and I haven't actually had a look into how those stocks went on. Allstate Corporation, the insurance companies and stuff. It does look like they've upticked a little bit, but it'll be interesting to see. Yeah, I mean, the rebound was imminent. I said the rebound happens over 3 months in that analysis. So usually a drop about 8%, and then you get it back over 3 months. They've rebounded. So if anyone bought that tip, congratulations, because in 2 days, it's done that 3-month seasonal play, which was interesting. But I didn't spend any time on the charts this weekend. That's one positive about living in Australia, is that no markets are open until Monday morning. It's Monday morning. The Sydney market opens the FX world, or Tokyo does. So I get that freedom of I can come in Monday morning and then the market will open when I'm here. And that's just lovely. Yeah. Because I like a Sunday roast. Roast.
Yeah, I can't believe it.
I know. You got to cook a good Sunday roast. But I also, do you like the spider I sent you yesterday? That red.
Yeah, I could not believe that. I've been showing my entire family about that that spider. Jord was that in your house?
On the back fence. Fence.
Oh God! Yeah. You should show the viewers. It should be a short video.
I think I can actually. Let me. Let's talk about what's happened in the leftovers. Let's talk about a Friday and Saturday, and let me see if I can find an image.
Yeah. So Saturday, obviously, we're expecting some fiscal policy to come out of China. which again left the markets a little bit disappointed. I was expected to actually see a little bit more of a movement from that, but maybe the market has been accustomed to China not really doing anything at the moment, which is amazing considering the rally that we had previously from the other stimulus that came into the market. So now a lack of stimulus is now not doing anything to any kind of Chinese stocks or whatever. You know, I thought that maybe we'd open up today and we'd see sort of the Hang Seng down a lot and whatnot. Yeah, but I mean, then you look at it and it was up like 25%. So you know, how do you get into a market that's been up 25%? You don't really, do you? You have to wait for some kind of movement back to get any kind of value in that market. So yeah, interesting to see that kind of playing out a little bit. I've been diving into it a little bit. We had CPI come out over in China as well, which came in at 0.4%, down from 0.6%. Interestingly, PPI year on year minus 2.8% from the previous minus 1.8. They were expecting some kind of, I guess, deflation expectations there, but back to minus 2.8%, which is they're going in the opposite direction essentially from where they were. They were starting to trend up a little bit from PPI, and then now it's kind of come back the other way again. So I think the situation in China is really interesting because they're now not necessarily giving the markets what they want. And because of that, we had the conversation before of whether this is going to be something that was continued rather than it's just going to be a reaction to the move. And at the moment, I'm thinking if China doesn't give the actual stimulus that is necessarily needed to prevent all this deflation situation, then they're going to be in trouble, and it's going to be a situation where the market's going to call the bluff, I think, and we're going to see some downside in those Chinese stocks and
which
in the way.
I think it's been another case of the market just getting ahead of themselves. Now we're traders, we're degenerate gamblers. That's what we do. We're professional type. Right. That's. But yeah, I think it is kind of front running. I mean, everyone pricing in that the CCP is going to do something. Like, whenever have you trusted the CCP to do anything when it comes, never mind economics, but priced it in as an expectation is just something that's a little foreign. I think we've got a lot of investors who aren't used to the Chinese markets buying up the Chinese markets, and then that's going to kind of fizzle and be really interesting. One concern, obviously, is being here in Australia. We want some kind of stability out there in China because we rely on it quite heavily, biggest trade partners and whatnot. Speaking of Australia, just a short segue. There's the little friends, which I sent John a video of earlier yesterday. I was cutting the lawns and I saw a bit of the web. So actually, fun fact, I saw another spider. It's called a wolf spider, right? It's a little garden one. And it was running up the wall, and I was going to get it on my hand to send you a photo because I know you would have freaked out about it, right? They don't hunt me. That facial expression right there is what I was leaning into. So I went to do that, and then it ran up towards this web, and I thought, oh, that's an interesting web. So, you know, you get like the long leaf and you play on the web until it runs out. I did that, played on the web, and that's what ran out. No. Now, that is the dangerous spider in Australia, so I'm glad it didn't run out and jump on me. But it was big. Yeah, it was a big one.
I can categorically say I do not see a web and then pick up a leaf and start tickling the web. I just do not do that. I don't know if anybody else does that. Is that something that everyone does in Australia just to see what spider pops out? Is that like is that a drinking game? I'm going to bet this is the wolf spider, you know. No way.
It's exactly what you need to know. It's the information. It's the same as trading, John. I got a hint. I got a crumb of a trade idea. You got to investigate to figure out what it is. It's the same thing. Hey, I've seen a web here. I got to test it out. I got to see what it is. But this is the redback. Won't kill you. Well, I won't say won't kill you. It hasn't killed anyone since 1950. So no one's died. But the bite is horrible. It'll increase your heart rate. It'll give you muscle spasms all over your body. It is immense pain that this venom will give you. So it's good fun. But I'm glad I got to share that with the TradeDelicious team because people who aren't Australian aren't used to things like that, and it's just funny to see your reaction. Let's have a look at what the VIX is doing and what the market's been doing, shall we, as we move towards freshly squeezed. Do you want to take a guess on where the VIX is today, John, or do you already know?
I don't already know. I could cheat and have a look, but I'm not going to. So
Okay, take a swing.
I know
Take
the
a swing.
trading.
Last time
I
we
know it was,
spoke, I think it was like 20.3 or something like that.
yeah, I think it's trading below 20. I'm gonna go below 20.
20.7.
Oh, okay.
It's a 20.7, but you were close. You were close. VIX flatlining. So we've topped out where we topped out in the early September, and we're just kind of sitting steady, which is interesting. I did see volatility. Keep in mind, today's Columbus Day, public holiday in the US. So we should expect the VIX really to do nothing. We should expect most markets to really do nothing. Musgrave's popped in and said the key phrase here is "haven't killed since." I like that. But yeah, so the VIX, we should expect a little bit of slowdown and volatility. I do want to share one thing with it being Columbus Day. The stock market is open, New York Stock Exchange. The bond market is closed. Stock market's open, bond market is closed. Keep that in mind. Volatility will be low. This is usually range traders. This is going to be your market. This is where you want to be. However, in the past, because there's such low volatility, it does mean if anyone wants to manipulate it, they can. One big order will move this market in a very, very quick and easy way, and then it will just go flat again. So just be very, very wary. It is going to be lower volatility. Yes, you can probably upsize your positions a little bit, but when it goes wrong, it'll go wrong badly. So make sure your risk management's in check. Let's do a run through of where we're at. If there's any surprises, I'll stop to talk about it. But from just having a quick look, I don't think there's any major surprises here because it's a public holiday in the US. Everyone, like, why are you here? Most people are in bed. What are you doing? It's early. Where are we at? Let's run through. Aussie is down 0.2%. The euro pretty much unchanged. Pound pretty much unchanged. US dollar CAD up 0.15. US dollar Japanese yen up 0.15. The XJO pretty much unchanged. Or the Oz 200 there. The DAX is up 0.4%. The Nikkei is unchanged. The FTSE is unchanged. The S&P 500 up 0.2% in pre-market here, but I think that'll be pretty much unchanged as we move towards this week. There's been no big surprises in election things, conversations. Another man arrested with guns, though. So can we count that as a third assassination attempt? Maybe. Coffee is down 1%. Gold is up 0.2%. Nat gas is down 1%. Silver is unchanged. Sugar up 0.3%, and oil down 1.5%. Crypto finding a bit of strength on the public holiday, up 2.3% for Bitcoin and up 2.6% for Ethereum. Looking across the bond yields, there's been a few changes. The US 10-year yields up 0.96%. That's from Friday. Remember, these markets are closed and they will be closed today. So I'm looking at the Friday pricing. 30-year yields upticking to 1.19% as well, which is rare to see the 30-year yields climbing like that, which is an interesting formality, shall we say. But through and through, nothing grabs my interest. Oil down 1.5%, I think is interesting in and around at the 74 prices. But as a whole, not overly sexy. When we're looking at economic data today, John, also not very sexy. Some Chinese loans, hopefully. But who's to say when they want to release that? Other than that, I mean, scratch your head.
Yeah, there's really nothing going on. There was some PPI data out of Switzerland, which actually went a little bit deflationary, minus 0.1%. So obviously a leading indicator of consumer inflation there. So that could be quite interesting. I was looking at the Swiss franc earlier, actually, because there's an interesting sort of commitment to trade report signal on that. Not necessarily a signal that I tend to use too often, but basically there was an aggressive short position coming from non-reportables, which are usually you want to do the opposite of what they're doing. So that was quite interesting.
Aggressive short in the Swiss franc.
In the Swiss franc at the moment, but again, I'm leaning a little bit more towards we were going to see a short Swissy anyway. Now, obviously, when we talked about it previously, we mentioned that I think it was a short-term pullback rather than a complete change in trend. We have seen that move now. I mean, we were speaking about it a couple of months ago as well in terms of I think there was even a seasonal pattern on dollar Swiss long. And that's kind of nearly fulfilled the range that it usually does. I think that's something that we spoke about as well. So, yeah, that was quite interesting to see because it made me think, do I really want to continue to be short in Swiss francs right now if the non-reportables who are usually wrong shorting very aggressively. So, but it's not typically an indicator that I follow when it comes to the current trade report data. But other than that, not really a lot going on, is there? There's a couple of Fed member speeches today. But yeah, it's going to be, focus is definitely shifted. Obviously, inflation was the big picture, now started to become less so. And then, it's all focused onto the labour market. But now I think we've really got to focus on what the election could bring and where the market sort of prices in what happens, because there are like 4 situations that can happen with the election, which I'm sure we'll go into detail in another market wake up soon. But yeah, really interesting. I think we're going to go through potentially a little bit of a quiet period heading into what's going on, and this is what makes for an interesting setup coming up for the next couple of weeks in terms of where positioning kind of occurs. Obviously, we've seen the S&P 500 rally into all-time highs now, and I think the idea of a bear market seems to be starting to falter a little bit.
That's what I want, John. That's those crumbs. They sniff it. As soon as it's no longer in the picture, that's when it smacks you.
Yeah, and I completely agree with that. I mean, we saw that with the yen, right? As soon as
they're not going to intervene. They're not going to intervene.
As soon as I said it, boom, it went and it happened. So maybe I'm trying to foreshadow something for us.
I see what you're doing.
What I mean? I'm trying to be.
Because they're listening. Just the name is Swiss Frank. No, I don't think it's a change. Bank, Swiss National Bank. They intervene. Watch it go.
Obviously, I'm such a good trader. They're monitoring what I'm doing, so I've got to just fool them a little bit.
Rightly so. I'm just having a look, a quick little gander at Nat Gas as well. We touched on this last week about the seasonal play mid-October to early November. If I bring up the season axe chart here, you can see we really top out in and around the 13th of October, which happens to be yesterday, and fall down in November. Now, I've used the detrending tool. Okay, so Nat Gas has tendally been falling for a little while, so I get rid of the detrending tool. You're looking here at 76% win rate. So that says 24, but we flip it because it's a short position with an average drop of 6.8%. Having a look from where we already are, I'd say this trend has already begun, right? So that's already moved about 13% from there. But when you're having a look at like the technical charts between this 2.38 and this 2.35, I think this could be interesting. I think this could be a really interesting area to target with Nat Gas. I'm not showing my chart. There you go. I think this area here could be really, really interesting short play to target Nat Gas. The only problem with it is risk management. But I thought that was a crazy little thing as I just doing my scan there that I wanted to share.
Well, actually, just to move into the sort of big bite, I guess, and what we're
are we making the shift?
Let's make the shift because Nat Gas is actually something. The big bite. I thought you were going to follow that up then. No, but yeah, Nat Gas was on my list essentially for what I'm looking at the moment. So I've actually got a little bit of a different view to what you're looking at. You've obviously pointed out there's a potential top in the market. I'm actually looking at sort of the correlation with what's going on with this year and some other years as well, and it's quite interesting to me. So I actually like the level that you've pointed out. I think that level is a brilliant level to have a look at for opportunities. But I'm looking more potentially to the long side. I'm a little bit more bullish on energies at the moment. Now, what's interesting here with the seasonal correlation with what's going on with 2024 so far, over all years, which is 33 years on Markets Made Clear, we've got the 92% correlation, over 20 years and 91% correlation. Even in an election year, we've got a 91% correlation. It's been very difficult to find correlations that go with this election year, to be honest. A lot of them not really following any kind of election year. So it's quite interesting to see one that is. Whether that actually makes it a little bit less likely in terms of probability.
I don't know. I don't know if I like that or not.
Yeah, because if nothing else is following an election, why is something like natural gas following an election year? Quite interesting. Yeah. But typically there's a little bit of a bullish signal just from this analysis where we, it's got 70% win rate, and usually between sort of October 18th to sort of November the 1st, we can see a bit of a bullish period according to this data. Right. So, you know, it's actually quite good that there's two platforms to look at, right? I actually find that quite helpful because it lets me look into sort of, okay, I like the idea of conflicting ideas, right? It makes me think, okay, what else can we look at in kind of, you know, situations in terms of, is this going to be a good one to actually look for if there is other data that's kind of suggesting that it isn't? I mean, if they both aligned, then that would have been sort of like, you know, brilliant. I know when we discussed JD in the past, and, you know, that that had ridiculous sort of correlations, you know, that's a good one. So a little bit of a mixed bag here. Obviously, you're looking at the sort of downside, which I don't mind in the near term. That level that you talked about, I think, is a good area to look for potential bullish.
Yeah, looking at around pretty much 2.4.
Yeah, around that sort of area. Yeah, I quite like that. But again, like, I was just kind of looking at sort of how I'm playing the markets this week. Like I said earlier in the live stream, that I don't really want to touch US dollars at the moment. I do like the idea of buying dollar, right? Dollar can be seasonally bullish within the sort of election period. Running up to it can be quite bullish. Obviously, we've seen this downside. We've talked a lot about that. We think it's a little bit overdone. I think it's a little bit overcooked. I think the market's mispriced it, essentially. So that's something that I'm kind of holding on to. Now, if we just have a little flick back over to the Commitment to Trader reports, still something that's big on my list to get short at the moment is the Australian dollar. I know that we've kind of discussed the sort of, I suppose, the benefits of the Aussie at the moment from the RBA standpoint. The only problem is the China situation. I think this is going to have a real big impact on kind of where the market prices the Australian dollar right now. I think we saw that kind of big run up because we were getting that sort of stimulus in the Aussie. And I just don't think it's there right now. And what's interesting about the reports at the moment, I thought we'd come to this week and we'd see a big shift in the positioning, which would make me think that we are going to see continuation of Australian dollar bullishness. But we haven't. They've actually leaned more into getting more aggressive. The hedge funds are actually buying more aggressively than they have previously. Last time they were buying this aggressive, you know, we were at the highs of the range and price fell to the lows of the range. You know, are we going to see a similar sort of, you know, fashion again, which is quite interesting.
This is where the importance of knowing the currency comes into play, right? Because if you didn't know Australia as an economy and you were trading the Aussie dollar, you would look barely at interest rates, GDP, that fun stuff. The interest rates are suggesting that until March 2025, we're going to be sitting at what we're sitting at, right? We're in stagflation and we're going to be holding them high, which will lead a lot of people to want to do that carry trade positioning. You can maybe catch, 7 months of positive swap if you pair it against something like the Swiss franc, for example, and pull in 3% return over 6 months or maybe less than that, which would be the obvious good, which would lead then people, well, if people are going to do that, that'll lead demand to the Aussie dollar. So that's why I'm going to do it. But what's, I think, carrying more weight here, and the real problem is China.
Yeah,
and I think that's why your report is showing that. It's showing people going even more bearish on the Aussie dollar, because it's not about the stimulus at the moment. It's not about dropping the interest rates. It's not about the inflation. It's the fact that our biggest buyer of everything is underperforming and in a problem. And it's not just, they're seeing a bit of trouble. They're in a problem. They're in a problem. And, we're having mass layoffs in mining, iron ore, coal ore. Like, these are things that drive the Australian economy. There's problems up front, and I think this is people's risk management plan saying, nope. Regardless of carry trade, there's too much risk with the Aussie dollar right now.
Yeah, you made a really good point there, because when you told me that last week about the mining situation and people getting laid off and stuff, it got me thinking, and I was like, okay, well, last week we had the bearish signal on the Australian dollar, which played nicely into sort of my positioning last week. So for me, it was like, I like the idea of further downside here. I think, the market again has gone a little bit too bullish too soon, right? I think the market has overpriced a lot of these currencies at the moment. So the Australian dollar is definitely something I'm still on the lookout for. Now, I tried to kind of, because it's the big bite, I wanted to kind of expand this a little bit. I don't just want to talk about COT and just, you have to follow COT, whatever. So I went on to the seasonality of the Australian dollar as well. And I know me and Jord talk about seasonality a lot. The reason why we talk about it a lot, yeah, because we love it, right? And there's good reason behind it, right? There are hedge funds out there that have seasonality funds, right?
1 + 1 = 0.
Yeah, us included, yeah. Yeah, and they do really well out of it. So there's a good reason why you should look at this kind of stuff. Now, I was looking at the seasonality on the Australian dollar, and it's not great. It's not great in terms of, has the market really been following a seasonal pattern? Not really. I did a kind of custom period here, but it only pulled in 6 or 7 years, which is okay, but it's not like a ton of data to work with. And when you kind of look at the data of this year representative to that custom correlation, I mean, it's not following it that well, is it? It might say that there's a 70% correlation there, but that's probably from what happened earlier in the year. I'm looking at these fluctuations here, and I'm not seeing that. What I did want to do though is have a look at this little section here, just current correlations. What is the market sort of looking at now? 3i Group, that is a private equity company based on the London Stock Exchange, I believe.
Okay.
So I don't know. I tried to have a little look, but me and stocks, we're not that great. What's interesting though, Nike, 91% correlation with Nike at the moment. Nike has been sort of plummeting right now. I know it's crazy, isn't it? Nike has been plummeting at the moment. Basically, they've had a whole new takeover situation, haven't they? They're struggling to sell. I think actually their profit margins were down for the first time in like 9 years or something. Their profits have been down. So Nike in a little bit of a struggling situation at the moment. So just trying again, with the big bite, we're trying to make you think outside the box a little bit, correlation with Nike there, just from price action, I guess. Another one that I found quite interesting was the New Zealand dollar versus the Canadian dollar. Obviously, two risk currencies there, two commodity-based currencies. I had a little look at the chart myself just to see if the correlation was there, and it's quite a strong correlation at the moment. So, if you are looking at Australian US dollar, and maybe you can't find a good position to get into because of a strategy that you're using, right? Then sometimes you can go and look at a correlated currency pair. Kiwi CAD's one of those at the moment. So let's say you had a signal on Kiwi CAD, but you didn't really have it on Aussie US dollar, then you can go over to Kiwi CAD and potentially look at that move to the downside. Because I also like Kiwi shorts too, because usually you see Aussie and Kiwi flow in a similar way.
Yeah. I mean, I don't seasonals I love. I trade them all the time. There are times where my macro analysis says, hey, this ain't a play. Which is really annoying, because when you look at the Aussie dollar here on SeasonX, I mean, 82% win rate over 24 years on this. And to not take this trade, now it's the right call not to take this trade. But let it be known, like for me, the macro situation is too volatile. It's not good enough, right? 100%. But to know that this year is going to go without this pattern trade just hurts my soul. Seasonal traders, you come back a year later, you take the same trade. It's like, oh, I did a load of new analysis. Look at that. You didn't. You just did the same trade. Not going to be able to take this trade this year, which is gut wrenching. An 82.6% win rate. It's like, oof. I mean, that's to take it to go. That's to take it to go, because that is seasonally the best thing you can look for in a seasonal trade, and we're not taking it. And I want you guys to ask yourself, why are you not taking 82.6% win rate, average return of 1.6%? It's a short-term trade. What we're looking at maybe 28 days-ish. Why are you not taking it? Well, not taking it because the macro matters. Macro matters. We can't share that enough. That's your take it to go for today. Andrew's just popped in a question saying, have you guys talked about managing risk on seasonal trades since the drawdown varies per year? I just use the average. Boom. Yes, there you go. You've spoken about it. I do have a look at the average. The risk, yes, I look at the average, so I have a look at what's capable. It's the same when you stress test the strategy. you need to know what's capable of the drawdowns, right? So I do have a look at the averages to get an idea of what's capable, and then I'll use technical analysis to show me where my hard stop would be, for example. But yeah, that's a great question there, Andrew. Well done.
Yeah, absolutely. And just to kind of like add on to the end of the sort of seasonal rant that we always have, you know, it's also important. Like for me, when it comes down to seasonals, anyway, you know, if I can pair more data with a seasonal, then it just makes that seasonal analysis a little bit more, you know, upholding and a little bit more true. You know, I love comparing the commitment trader reports with a little bit more oomph. If you've got a COT signal plus seasonals, that's the chef.
And technicals.
And technicals.
Oh,
yeah, that's the
stop it. Take my money. Take my money.
Give me money.
That's going to do it for another day. We'll be back tomorrow, 8:30 a.m. British Standard Time. Make sure you like, comment, and subscribe. We'll be back to do it all again. Obviously, today's a public holiday in the US, so be ready for less volatile markets, but we'll see you tomorrow. Cheers.
Cheers.